a year or so ago, I said FinTech is dead. Long live FinTech. Of course, the internet only got FinTech is dead, but it was essentially a new generation of FinTech emerging.
And infinite ROE businesses mean that once you own the customer, they're with you for life. I thought it was a great framework.
One of the things that happened between Aadhaar plus UPI is essentially subsidies ending up in a farmer's hands overnight.
Where are we at on this physical versus digital in the industry, and where are we at in our own thinking? How has the narrative changed, Vikram, for in your mind in the market and for us? You know, you guys seem to be, or we seem to be making investments in sectors that would be considered the highest risk right now.
Yeah.
But we seem to be repeating a pattern. We have done that before with 5-Star also, which has been an unbelievable journey thanks to Mr. Lakshmipati. So where are we at?
So I'll
and where does AI fit in?
Yeah. So I'll try to contextualize it. I think maybe a year or so ago, I said FinTech is dead. Long live FinTech. And of course, the internet only got FinTech is dead. But it was essentially a new generation of FinTech emerging, which is much more part of the overall regulatory framework, far stronger and far more robust. And overall in financial services, what happens in 20 years with a company or an ecosystem, then that exact same value happens in 10, that exact same value happens in 5. That's the compounding that happens in financial services and FinTech. And so that's what's happening in the ecosystem. So if the ecosystem, if you just take...
And sorry to interrupt, but if you were to layer that into GDP per capita growth of India and where we are in our middle income journey, that puts it on steroids.
It could be...
Because credit is very core part of
it. It could accelerate. So yes, we've had these ups and downs and there's some regulatory curbs and all that happening. But over the last 10 years, there's about 100 billion of market cap that's been generated by the FinTech ecosystem. I'm not talking about the incumbents, which is another 500, 600 billion. So that 100 billion, we should be able to see that compounding in the next 5, which should then compound even faster. That's actually the overall, I would say, long-live FinTech. Now, in terms of opportunity sets, because now we have 2 large opportunity sets. One is, there is a sliver of 100,000 users or 1 million users who want something very unique. And this is usually the quote-unquote, more wealthy, more richer users. They have more money and they're demanding a lot more. And it is possible now for a founder to build a company on those 100,000 users or 1 million users. We have companies like Deserve in our portfolio. We have Cred, which is going after that unabashedly, right? So there is that opportunity set that has emerged. And then the other opportunity set is that we have only about maybe 100 million people with real access to financial services. And so you can build a company on the next 10 million users who you choose carefully and underwrite and provide new financial services to that. So insurance distribution is on that kind of trend line. SMB credit is on that kind of trend line. And consumer credit is on that kind of trend line. So it's 2 separate opportunities, build for 100K to 1 million or build for the next 10 million, both of which are incredibly exciting. In both of which, the common thread for us is, can you spend the right CAC, right, to build financial trust with that user? And once that user gives you that financial trust, you can build a large company around it. Because once you have that trust, and that trust could happen either physically, physical plus digital, or just from a phenomenal user experience, or by delivering crazy value. And once you get that trust, then that person compounds on that platform. They live their life, they make a lot of money, and therefore you make a lot of money with them, right? So that's the common thread both on the 1 million as well as the 10 million. The last thing I will say is just the breadth of opportunities. We used to think, okay, this year this is payments. This year we will invest in credit. Today we can actually invest, one investment in payments, one investment in credit, one investment in consumer credit versus SMB credit, one in wealth, one in insurance, right? Because that's the breadth of opportunity that is afforded, courtesy just sort of digital penetration.
So when you say Phygital, so if you contrast, let's say, consumer sector where people went from D2C to omni-channel, now quick commerce, and it's kind of all blended in today. But would we invest in somebody who is pure offline retail, has no, let's say, sales online? Unlikely. But let's say it's much more blurred. Education as a sector today, or even health as a sector, most VCs, if you don't have tech, will not touch you, right? So most VCs would not do traditional chains anymore in hospitals or in education. Where are we at on this physical versus digital in the industry, and where are we at in our own thinking?
So overall, if you look at sort of what the first wave of fintechs did, it was to throw digital at the customer acquisition problem, right? Online customer acquisition must be cheaper. It turned out that's not true. Online customer acquisition is way more expensive, and therefore you couldn't build great businesses. And if you were doing expensive customer acquisition as well as building a lot of software, your company was very inefficient. Now founders are being very, very discerning of saying, where do I use digital? Sometimes I might be doing offline customer acquisition, but then online everything else. And that's creating much greater operating leverage. Or somebody like OneCard, where I will take OneScore, which is a very unique customer acquisition tool with using tech, and then actually have a completely digital only funnel. So I think people are getting very smart about how to use, where to use tech, where to use online, and so on. We have one company in our portfolio, Seeds, which is essentially looking at graduation of the microfinance borrower to the SME borrower. And they have a very unique way of using Phygital. It's actually a completely offline sales force, but managed very digitally. And in some way, it's almost like Big Brother, like really watching what the sales force is doing, what the credit underwriters are doing to ensure that they eliminate all fraud. Right? They're okay taking the credit underwriting risk, but not the fraud risk.
So it was one of the most fabulous examples of using tech to automate or to get the underwriting better. In Prime has a WhatsApp creditometer, like OneCard has OneScore. We were chatting about how AI applies here. Actually, there's a lot of education to be done. So could you actually have a AI, your personal financial services concierge, even for those markets, even for those borrowers? They are very actually curious. So I think it's actually all converging and very interesting.
Even more so, and you asked this question around AI. That's sort of the obvious one, right? Because there is such a big funnel between somebody who's interested in getting some financial services to somebody who finally gets a loan or somebody finally invests. And that gap is just education.
And maybe you mentioned sort of two markets. There's like the 1%, and then there's sort of the rest of us where we are sort of still working on just penetration of financial services products. So maybe projecting this out, say 10 or 20 years, right? And I want to cover each one. So what do you think we'll see in terms of new behaviors, new products, new offerings that work for the top 1% in the next 20 years?
I think, the good thing is that your fundamental relationship with money of, wanting to make it, wanting to spend it, wanting to save it, wanting to invest it, that doesn't change, right? So there is that need state with money. Now, even that, with how the next generation is behaving and what they might value is different. They might value only compute, might not. So, but let's say that fundamental relationship with money and value is the same. So then it's the question is, how fast you can access or interact with your money, right? And I think there it is going to be in the you think it and it's done type speed. That's essentially where it's going to go. Second is sort of credit just drives the economy both at a person level, fundamentally at a person level in order to actually graduate, but also at an economy level. And I think the power of right credit at the right time, I think the inflection that it can create in a person's life as well as in an economy's life, I don't think we can even understand that kind of impact, right? That for the right person, you essentially get the right credit at the right time and they put it to use is like a big multiplier on that person's life and then on the economy's life. So I just think that we can't imagine that kind of future on what a credit card actually looks like and what a credit line actually looks like and how dynamic that will be. Then that credit agent talking to other agents. So I think it is just one of those scary, exciting things that you can't imagine, right? So the fundamental way in which you walk into a store, look, the way you shop, credit being available to you, if you're going to put it to the right use, and therefore, Pranay buying a camera is different from me buying a camera, and therefore you're getting that kind of credit. It's just incredibly exciting what is possible in like a 10-year period.
And the only layering I would add, I may be completely wrong, but my view is the difference will be this middle segment, maybe there'll be gradations of valuing time over valuing money. And I think if my time can be freed up, and I'm saying the 1% or 10%, if their time can be freed up for the same things happening, that'll be valued a lot. And for the next set, it'll be, can I get bespoke solutions?
So this is for the 1%. Now imagine what it is like for the next 10 million. One of the things that happened between Aadhaar plus UPI is essentially subsidies ending up in a farmer's hands overnight. Now imagine that subsidies ending up overnight, but because that farmer has been a great producer and you have that data set, and because that farmer is actually planting at the right time, the right things, right? Then there could be more credit funneled to that farmer versus some other farmer who might not actually be planting the right things at the right time. That kind of intelligence just doesn't exist. And so that's the kind of stimulus that can be provided to that next 10 million of the economy.
Got it. And I guess the other one I was thinking about is, again, India is a savings economy. Obviously, you've done investments on the wealth side. So what have you seen in the last few years? What are you excited about going forward?
See, firstly, it's very early. I was looking at the stats. It's like 8% of PAN card holders who have essentially invested in mutual funds. But it's close to 100% of PIN codes, like 99.8% of PIN codes. So it's very diverse in terms of number of, cities and towns which are part of this investing economy. But it's very small number of people, essentially people with some certain wealth. So we're still very early. But obviously, a lot of people have been missold stuff, have gotten sucked into like the retail frenzy on the markets and so on. So there is a lot of education, very early, but obviously some sort of misselling and so on happening. But I think fundamentally, we are still very early in terms of what are the instruments in which India should save and India should invest.
One of the smart people I respect, I'll take his name here, Ramdevji of Motilal Oswal. He said, अभी तक financial services में सबने जो पैसा लेने से देने वाले businesses में, basically lending businesses, which means you have to keep investing more money to give out more money. And he said the next wave should be infinite ROE. And infinite ROE businesses mean that once you own the customer, they're with you for life. I thought it was a great framework. And I do think the wealth businesses are in that. Some of the insurance businesses kind of are like that. But it'll be interesting to see that story play out.
But it's like with insurance, we still haven't figured out what are the right products for insurance for India, right? Because you want the right ticket size to drive penetration. You want it to be fully tech-enabled. So I think we are going to see this, hopefully, with the right now regulatory framework as well as the right mindset with founders, an explosion of products that Indians can consume across credit, across insurance, across wealth.
So actually, I like this LA forest fires happened. So I went online and started looking up home insurance. Even I don't know what to buy. Do people in India buy home insurance?
So I was with the CEO of an insurance company yesterday, and he was saying this is our lowest penetration right now, but potential for highest growth and highest innovation.
And it's very cheap. I just had the same issue. And then fortunately, the company I took a loan from forced me to buy it. And I realized, how can people not be buying fire? See, some of them you think will never happen. Fire, earthquake, storm, burglary, everything is covered at very low premiums. So
no, I think we should round it out with that, right? If you look at the sort of fundamental challenges for the country, right? Energy, compute, credit, and all of these are both sort of, big problems, but also exciting to solve.
And I think as a venture capitalist, you have to think about when there are large trends, you obviously want to play the end trend, but then you also taking product market fit risk. Then people say, do you do the picks and shovels of it? It is a very unique situation in India is that the picks and shovels are always in NBFCs and credits and lending and various types of finance, right? So we have spoken about this in the context of solar. You could buy or you could invest in 3 or 4 companies which are either EPC companies with solutions, whether focused on business or focused on end consumer, or you invest in a financing business. For me, the financing business piece is just a no-brainer. What you have to be careful about is apply some more, I would say, the risk underwriting. Normally, you are just underwriting credit risk. Here, sometimes in these industries, you are underwriting industry adoption risk, and you are underwriting the end industry business model risk. So it's a new game because if your customers start going bankrupt, but how? I mean,
let's make it real, right? So every time there is this new industrial type cycle, or there is asset creation, asset adoption, which leads to credit, right? So for example, in a logistics boom, highways logistics boom led to a bunch of CV financing, commercial vehicle financing companies, which grew. And so then they had to learn how to not just underwrite the person, but underwrite that vehicle, right? Ashok Leyland vehicle, different from a Tata vehicle and so on, right? And Tata Ace, different from a Tata Hathi, all of that came in. You're essentially saying that for energy, right? And you're saying energy adoption, whether it's battery, whether it's solar, we are going to see that wave. It is going to, the financing always runs hand in hand with that asset adoption. That will lead to like different.
And I think people have learned, because in coming back to your example, as the infrastructure build out happened, people also got into trouble because the build, operate, transfer model or EPC model or this model, business models were not very clear. So you also got NPAs going. I think people have learned from it. But it connects back, by the way, Pranay, to the earlier question on job creation, all of that we were talking about. We didn't talk about one of the most fundamental sectors of the world economy is energy, is electricity, is generation, which have historically grown at 1.5–2%. But assuming all of this is happening, they're supposed to grow like at double that rate. I think that is highly disruptive in a good way. They will create all kinds of industries which will create jobs, right? So I think all of this, it wasn't planned, but all of this connects.
Awesome. We'll stop with that. So thank you so much for tuning in.
If you like this episode of Zero to Infinity, there are so many more that you must check out. If you like Indian startup content, hearing about founder journeys, or knowing more about emerging sectors that we're investing in, Zero to Infinity is the channel that you need to subscribe to.